2021 was a year of unprecedented challenges for our diocesan community, but God has continued to work amongst us, and signs of hope abound. We have witnessed churches reopening and rebuilding, serving their communities and sharing the love of God. And whilst the centre of gravity for our mission and ministry will always sit within our parishes and local communities, the annual report offers a chance to reflect on the work of the wider diocesan team as well. As the number of people regularly attending our churches continues to decline, whilst the burden of compliance and administration increases on our PCCs and our clergy, it's important that the diocesan team continues to find new ways to support all of our parishes and volunteers in their tasks. Continuing to invest, train and support our clergy and lay ministers is fundamental to our mission as we seek to make disciples, to reimagine church, to be agents for social transformation whilst being mutually generous. We are blessed to have such an extraordinary wealth of people who are called to serve in our diocese, and we thank God for their gifts and generosity. Our work with schools continues to provide amazing and incredible opportunities to serve the common good. And in working there, we are making a real investment in future generations. Our strategic development priorities continue to add to our mixed ecology of mission and ministry, piloting new forms and approaches to parish ministry across both our rural and our urban areas.
On the 6th of June, we held the annual general meeting for the Winchester Diocesan Board of Finance, also known as the WDBF. As charity trustees and company directors, this is an important date in our annual calendar when we ensure all our systems and processes have been compliant, legal and effective. I'm delighted to report that our auditor's conclusion was that despite the high level of staff turnover and senior leadership changes, there was no impact on the internal governance and control underlying the generation of the annual report. Valuation of properties generated considerable debate and is now considered to be fairly stated and compliant with the new standard introduced in 2019. Looking beyond the purely process and financial issues, though, our annual meeting is an important opportunity to take stock and to reflect on the breadth of mission and of ministry across our diocese, a chance to celebrate our shared successes and to learn from where things have not gone quite so well.
Communicating diocesan finances is an ongoing task. Our finance monitoring group is working hard to increase the level and the frequency of information about our diocesan finances that we share with the Synod and the parishes. We want to take the opportunity to thank the Finance Department for their continual help and very hard work. They have been extremely supportive in our endeavours to communicate with further clarity and responsiveness. Our annual report and accounts must be produced in line with a whole raft of charity and company legislation, detailing what information is included and how it is presented. Whilst it is vital for us to follow these rules carefully, it can make the annual reports a dry and incomprehensible document. We've therefore tried to summarise a few of the key points for our diocesan community. In 2021, we received just over £11 million of income, 77% of which came from our parishes through the Common Mission Fund. We spent £10.4 million, 80% of which was used to directly support parish mission and ministry.
In 2021, our parishes contributed over £8.5 million through the Common Mission Fund. Given the unprecedented financial context, this figure is a real testimony to the generosity, constancy and commitment of our parishes, so we'd like to say a huge thank you to everyone who contributed. Despite this, in this year, we still record one of the largest shortfalls in Common Mission Fund income our diocese has ever had. By the end of the year, we received 91% of what we had asked our parishes to give, leading to a shortfall of nearly £900,000. We know and we understand that most of this shortfall was due to the huge impact the pandemic had on parish income levels. However, we also need to recognise that for some parishes, the difficult events of 2021 in our diocese contributed to a feeling of fear and mistrust. Understandable sadness at clergy posts being cut, added to rumours of financial mismanagement, have led to a few PCCs not wanting to give money to the Common Mission Fund. Ironically, if this practice were to continue, it would inevitably lead to more clergy posts needing to be cut, the last thing we want. We need to both recognise and name the challenges we have been through, whilst also coming together as a diocesan community to share in our mutual responsibility to fund our mission and ministry going forward.
In 2020, we took the decision to freeze all clergy and diocesan vacancies, and this was to mitigate the financial impact of the pandemic on, of course, the diocese, but on our parishes too. Unfortunately, one of the unintended consequences of that decision was that in 2021, it led to a huge number of parochial vacancies. We started the year with around 20 incumbencies in vacancy, of course, on top of the 22 that we had cut. We have worked very hard to fill these posts as quickly as we can. But in some weeks, it almost felt as though for every new appointment we were making, 2 other clergy were prayerfully considering whether it was time to retire or move on to another parish. And of course, last year, because many clergy had basically been unable to move for over 18 months, there was a sort of rush of people reassessing their own call and priorities and where they're called to serve. To put this into context in our annual accounts, we would always expect now to have an average of around 120 incumbents in post and 27 curates on top of that. But in reality, most months, we only had 102 incumbents drawing a stipend. In 4 cases, we've been unable to proceed with filling a vacancy because of an ongoing pastoral consultation about the future shape and size of our benefice. We are continuing to work through complex processes as fast as we can. But I do want us to acknowledge that this has taken a huge toll on the ministry in our parishes and on the morale and well-being of both clergy and lay leaders. We cannot begin to express our gratitude to everyone involved in ministry, lay, ordained, stipendiary, self-supporting, and that extraordinary group of retired clergy, who so often go above and beyond anything we could ask to maintain pastoral care, public worship, and lead the mission across our diocesan community.
A quick look at our annual report will show some significant figures. In particular, you may notice that the value of our assets rose during 2021 by over £20 million. This sounds like a fantastic result and a huge missional opportunity. But unfortunately, most of this money is not really available for us to spend. One of the duties of the WDBF is maintaining the rectories, the vicarages, and other ministerial houses for our clergy to live in. This makes up the bulk of our assets. In 2021, we were caught by 2 changes that impacted on their recorded value. First, the accounting regulations that cover how charities value their assets, such as houses, were strengthened, meaning we had to conduct a detailed and desktop review of all 240 plus houses we own to reassess their value. Normally, we would only revalue around 20% of our houses each year. But with the change in legislation, we agreed with our auditors that the full review was needed. And of course, we ended up doing this at a time when the property market across the country, and in particular across Hampshire, was increasing at a significant rate. The result of this meant that the book value of all of our houses increased by over £16 million. And of course, in reality, though, nothing has actually changed. We still own the same houses, we still use them for our clergy. Whilst we may realise some of those increased values from some of the houses we plan to sell in the next couple of years, the vast majority of that 16 million remains tied up in our clergy houses.
In many ways, our annual accounts echo much of the story of our diocese in the last 2 years. They show the tension between our declining income levels and the ever-increasing and urgent need to invest in local ministry. They show that when we fear our resources are at their scarcest, God's abundant provision does not fail us. Some may read our accounts and see the operating surplus and increased balance sheet, and understandably question whether the savings made in 2020 were truly necessary. Were our projections too pessimistic? Were our cuts too deep? These are questions we continue to prayerfully wrestle with, whilst also exploring new ways of managing our assets and reviewing our expenditure so that we can continue to invest in Christ's church.
Our focus now needs to switch to the future. The tough decisions of 2020 led to our financial surplus in 2021, which will help give us a strong platform from which to grow the mission, the ministry, and the resources of our diocese further. There will be some challenging financial times ahead, but with God's grace and the continued generosity of our parishes, we look forward with confidence and with hope.